so, but I believe that a big part of a business owner's success is the advice that they get during the business investigation process. And so that is really what I really am passionate about providing. So I go 100 miles per hour trying to give as much advice as possible to these franchise buying candidates during the 1 hour consultation calls.
You're right about the risk, but the odds are much better than Vegas or even the stock market.
Absolutely. Absolutely. And a lot of it's lifestyle, I mean, like, why do people want to go into business? Oh, I want to make a lot of money. Okay, we all want to make money. But like, I'll tell you, like, the main reason why I'm in business is because of the lifestyle. I love just, being my own boss, and I love working hard, and, the money's there. Yes. And we all need money, and it's great. But it's the lifestyle. Like, I just wouldn't have it any other way. It's like, so a lot of it comes down to self-awareness, and this is something that each and every person out there has to do for themselves. But what do you enjoy doing? What makes you happy? And map your life around that. And so the lifestyle of being a business owner, all of the challenges that come with it, and working for yourself, building something that is your own, the nonstop action of it, is a lifestyle that I prefer. And so, for people out there who want to be business owners because they want to make a lot of money, that's great. But also, what is a lot of money? That's a subjective thing. Like, what's a lot of money for person A may be, not enough money for person B. So we all have our definition of, how much money do we need to be happy? And if you can do so, if you can make that money living a self-employed life as a business owner, and as a franchisee, because a lot of people, when they think of business ownership, they think they got to start something from scratch. And that's one way of doing it. But what I love about the business resale and the franchise world is that you don't have to reinvent the wheel. You just have to keep the wheel spinning. And so business ownership by investing in a franchise, in an already existing business model, is one way to realize the dreams of being a business owner without having to come up with a business from scratch.
I think Elizabeth has been waiting to ask you a question for the past few minutes. But
Please.
Fred, do you need to break for a commercial before Elizabeth asks her question? Hello, Earth calling Fred. I don't think he can hear.
I don't think his earphones are on right this second.
So
we'll just go on until he stops us. So you mentioned early in your conversation that you had a mentor as you were coming out of college and going into the advisor, the Schwartz business before you were the partner. The next issue coming out on the 1st of the Franchise Woman is all about paying it forward and mentorship. So I was wondering what you valued from that relationship of being mentored, and what has it enabled you to do? Because consultancy is sort of a mentorship role. The things that you're doing mentor people through the process and hopefully set them up for success. So what did you take from your experience that you've been able to pass along?
Oh, that's a great question. Really, I mean, just I've really realized as the years have gone by how fortunate I was to have a mentor, because not a lot of people, not a lot of 24-year-old kids coming out of college have the opportunity to have a mentor who believes in me, like, to actually have like someone of an older generation that puts all of their chips in the Mike Reeder bet. I mean, I was just a wide-eyed kid, and to just have, so to have a mentor like Barry Schwartz, who's like a second father to me. And we are like family, and families fight, like not every day is rainbows and butterflies here at Schwartz and Reeders. But I mean, what it's really taught me is it's really taught me of just how important it is to invest in the next generation, and to understand that we're here with a finite amount of time on this earth in the positions that we're in. And as time goes on, it's only going to become inevitable that we're going to have to teach, mentor the next generation. And Barry's old enough to be my grandfather. So that is really something that I've really just been so appreciative of my relationship with Barry. Just being so fortunate to have it. It's really helped me a lot. And so, just like you said, I do think that my relationship with Barry does play a role in how passionate I am with setting up these business owners for success with the advice that I give them during the business investigation process. Just because, I mean, they're vulnerable in the sense that they're relying on the advice that they're getting from all the middlemen and middlewomen that they meet in the process of buying a business. And so I've had a mentor that has really just gone way above and beyond to, like, to teach me the ropes on everything in the accounting industry. And so I've built on that foundation year after year after year. And so I do definitely think that is a reason why I'm just so naturally passionate about setting up these business buyers for success as much as possible.
Hey, franchise owners, how's your local marketing? Do you feel like you could use some help keeping up with your social media posts and comments and reviews? Do you wonder if you could be doing more to attract local customers? Are you able to identify new movements to your local area? At Westvyne, we help franchisees like you reach more local customers through digital marketing. With daily monitoring, creative content, ad placement, and customer data intelligence, we'll get your business in front of the people who want your products or services. We also work with franchisors who need an agency to handle the digital marketing for all of their locations. If you're ready to reach more local customers, give us a call at 805-265-5440 or visit us at westvyne.com. That's 805-265-5440 or westvyne.com.
The Franchise Woman is a bi-monthly digital magazine that empowers women as they navigate the franchising industry by providing relevant news, tools, advice, and inspiration. We are a resource for women who are seeking to own their own businesses, improve their existing businesses, find creative solutions, and take advantage of franchise opportunities. We feature women in the business who best exemplify our ideals and have something to teach our readers. In addition to our exclusive articles relating to the female entrepreneur, we also feature brands that are geared for women. Women have become the fastest growing sector in business ownership and have become a powerful, influenceable force fueling the economy. The Franchise Woman will give you the news that is relevant to you to help you navigate the path of successful franchise ownership. By women, for women, and about women. We are the Franchise Woman. Join us today at www.thefranchisewoman.com.
All righty. Well, I have a two-pronged question. One is, in a non-pandemic atmosphere, what is your role in the franchise industry yourself? And secondly, in the pandemic that we're in now, how has that role changed and what have you done to adapt to that?
So my role in the franchise industry, non-pandemic, is to provide as much value as possible to consultants and their buy-side buy-side candidates in the context of accounting, tax, entity structure, funding, and financial projection as much as possible, because it's such a vital part of the business buying process. And I've noted, and a lot of there are some brokers out there that come from financial backgrounds, where they come out of the financial investment services. Like, I know a couple of brokers that used to work at like Morgan Stanley and Charles Schwab before they became franchise brokers. But a lot of franchise consultants, and a lot of people out there, if you're a CPA, you're a CPA. If you're a doctor, you're a doctor. If you're a lawyer, you're a lawyer. And so there are a lot of consultants out there that they're getting asked accounting and tax related questions, funding, entity structure related questions from their candidates. And And so instead of just, instead of just telling them, oh, just go talk to your CPA and whatever your CPA says, they now have a CPA who's also, a part owner of a business brokerage franchise consulting firm myself, and a CPA who is a multi-owner, who owns two businesses. Like, I want to help brokers close deals, but beyond that, I want to help the people that they broker into businesses for long-term success. Like I would think that a broker's, and this is and everyone can be different. There can be different answers on it, but I would think that the legacy of a broker, of a franchise consultant, would be not how much money they stack in commission checks from deals that they close, and I'm sure that a lot of them do define their success by that, but how many buyers do they broker into businesses, and those buyers are successful in business year after year after year, and are in business for 5, 10 plus years, and then and sell down the road at a profit. And so I want to be able to, and I do think that a lot of the front end advice that these buyers get, that plays a role in that long-term success. And a lot of this advice is centered around the accounting tax. And I beat those terms to death, because it's because like there's nothing fancy about it. It's accounting, tax, entity structure, funding, financial projection. And I'll say those 5 terms over and over and over again because they're so gosh darn important. And so brokers and their candidates have a resource in me. I like to say I'm a tool on the tool belt of franchise consultants whenever they get inquired from their franchise buying candidate about anything of those 5 types of categories. They don't have to just say, oh, go and talk to your CPA, whatever, because then every CPA out there, may give them different answers. Like but with me, a lot of the brokers that I work with, they know my view on things, that they know how I operate. They like how I over-explain and I over-educate these important items. I explain the pros and cons to everything to franchise buyers. So I'm a tool on the tool belt of brokers out there to provide value to their franchise buying candidates in the context of accounting, tax, finance, entity structure, financial projection. So that's going on no matter what, COVID-19 or, a normal non-COVID-19 world. But in the COVID-19 world, a lot of it, it's the same. Debits are debits and credits are credits, regardless of COVID-19. And so, taxes are taxes. And really, there's just a lot of virtual stuff. My role hasn't really changed. It's just the world around us is kind of going through this crazy chapter right now. But I think that, but there are people that still want to buy businesses. There are people that, I think that there are going to be more and more people that want to give business ownership a go now that maybe they got, they're on unemployment right now, or, maybe they got laid off, or maybe they have to switch industries because the food service industry isn't working it anymore and they want to do something else in some other industry. And when people think of franchising, so many people, when people think of franchising, they think QSR. They think, oh, Dunkin' Donuts, Subway, McDonald's. But franchise, there's so many industries that franchise. There's thousands of franchises out there in several different industries. And so, and then a lot of service-based industry, a lot of home-based industries. So in a COVID-19 environment, I think that exploring all the different industries out there that franchise businesses are in, a lot of them are service-based and home-based, that you can operate in a COVID-19 environment. Because you don't have to have brick and mortar. You can do it. You can operate it from the house. We're still having conversations about buying businesses, but the types of just educating the franchise buying candidates about all the different options that are out there. And this is more of the consultant's role. The consultant, the actual franchise consultant, is the one bringing awareness to the franchise buying candidate about all the different options that are out there in terms of industries and types of businesses, different investment levels. But with all that said, what's a common denominator is, well, you got to set up your entity. Like, what is it going to be, an S corp or an LLC or a C corp, and why? You're going to have to fund it with you're going to fund it with your own cash, with your own retirement assets, whether you're going to leverage it with an SBA loan. Why? Pros and cons of each. And you're going to need bookkeeping no matter what. So there's, regardless, like, so COVID-19, I think has really been more of a something that the brokers have to triple down on and really use it to their advantage to bring awareness to their candidates of all the different types of industries that are out there, home-based, etc. But for me, and as my role as the affiliate CPA of the Franchise Broker Association, working with several franchise consultants out there, it really hasn't changed my role and what I do and the value that I provide in my process.
All right, Fred just note that we had a little bit of technical difficulty, I think you noticed earlier. So we wanted to circle back around and just make sure that we don't miss out on a couple of things that you talked about. And one was the common questions that you do during your hour-long consultation, but more, what is your opinion about the funding? You talked about that people asked a lot about that and the ROBS plan. So if you want to just quickly recap.
So recap the common topics that are discussed during the 1 hour consultation calls?
Yeah, and then discuss the different funding options and in particular the ROBS plans.
Sure, yeah. So the most common topics that are discussed during the 1 hour consultation calls mainly center around, how do I fund my business, debt or equity, and with equity being most commonly retirement assets, and entity structure, S corp, C corp, LLC, and why. And so going back to your question, Elizabeth, about funding and more specifically ROBS plans. So ROBS plans, so ROBS is an acronym for rollover as business startup. And I'm sure everyone here on this podcast is aware of what they are. And so it's a way for franchise buying candidates to leverage their franchise purchase and business operation with retirement assets, tax and penalty free. And so, so the way that the ROBS promoters out there solicit these ROBS plans to both brokers and to franchise buying candidates, I'm not a fan of the status quo of how the process works today. I think that there's not enough, and like everyone has their own agenda, but so I'm a third party, unpaid, unbiased affiliate of the Franchise Broker Association. My value is to just so my role is to provide as much value as possible to the franchise buying candidate, pros and cons of various different situations, to give them as much information for them to make as informed a decision as possible. So I don't have so yes, naturally a lot of these people, they come back and they work with me for accounting and tax services, but they'll come back and they'll whether they go forward with the ROBS or they go forward with an S corp or they go forward with whatever, they still need to get their taxes and their bookkeeping, etc., done. And so so I go into the phone calls with I have no expectation if they want to become an accounting and tax client of mine or not. If they do, great, and if they don't, great. My main purpose on those phone calls is to provide value, and then whatever happens after that happens. And I think the reason why I get a lot of those people as clients is because they sense that I really am just telling them everything, and I'm not keeping certain things for them, or I'm not trying to steer them in one direction. I'm trying to give them as much advice as possible on every single different direction, and then let them make the end decision. But when it comes to ROBS plans, I don't like the status quo in the industry and how they're presented to both brokers and to the brokers' candidates. I think that they're rushed on them. I think that they just talk to them about the pros. Oh, it's a tax and penalty free way to use your retirement assets now, and that's true. But when they say tax and penalty free way, what they mean by that is it's just a rollover. So it's just a rollover, just like any other rollover. Like when you roll over your old IRA into a 401k, or you roll over from one IRA to another IRA, but any sort of pre-tax rollover for anyone out there, if you get a 1099-R with your tax documents with a code G in it, it's got like $100,000 as gross amount taxable is 0. It's a rollover. And so that's essentially what they mean by tax and penalty free way to use your retirement assets now, because how the ROBS works is it has to be a C corporation, and a C corporation, then the C corporation gets its own retirement plan set up. And then that retirement plan, so it's a two-step process, the actual money flow. The first money flow is it's going to be the tax-free rollover. So that goes so once the C Corp is set up with the new C Corp's 401k plan or retirement plan, then the first money flow is the rollover, for the tax and penalty free rollover from the old retirement account of the franchise buying candidates into the new C Corp 401k plan. So that is the tax and penalty free rollover. It's just a rollover, just like any other rollover. Then once it's in the C Corp's 401k plan, the actual 401k plan itself is the shareholder of the C corporation. So the retirement plan is going to purchase the privately held stock of the C corporation. So then the money goes from the new C Corp's retirement plan into the C Corp's checking account. So that's the capitalization of the business. So that's the two-step process. It goes from there's the tax and penalty free rollover, which is getting it from the old retirement asset into the new retirement asset, which is the C Corp's retirement plan. That's the rollover. And then it goes into the actual C Corp's checking account, which is the capitalization of the business. And then once it's there, that's where it can be used to fund the business operations, pay for the franchise fee, used as a downstroke on an SBA loan, used as working capital, used to take a paycheck out of it. But so that's how the ROBS works. And so when ROBS promoters out there are pitching ROBS plans to consultants and pitching them to franchise buying candidates, and it's not in their agenda. I get it. To do so, but they don't talk to them about the downsides of ROBS plans. And so this is a role that I serve in the franchise buying. And I'm not trying to step on anyone's toes. I'm just saying it how it is. And so the year after year income taxation of a C Corp for a small business is less favorable than the year after year income taxation of an S Corp or an LLC. If you're an S Corp, and you're a shareholder who's materially involved in the business, you can save a lot of money in self-employment taxes by salary control, the way you pay yourself compared to salary versus profit distribution. You can't do that in a C Corp. Also, the ROBS plan has lots of fees. A lot of the ROBS promoters, not all of them, because and I see that there are some of them that are changing their fee structure, but a lot of them charge around $5,000 right off the bat just to get set up. And then that's just before you even blink an eye, and then it's going to cost an extra about $2,500 to $3,000 a year in compliance fees. All the fees that go involved to file the 5,500, and because the 401k plan owns privately held stock in the corporation, which is the actual C Corp, then they're required to file a 5,500, which is the informational return that a 401k plan has to submit to the IRS and the DOL each year to disclose the retirement plan's assets. And so there is a stipulation that if you have a solo 401k plan, which a lot of people start out as solo, like meaning that only like the owner and the owner's spouse are the only participants, and you have less than $250,000 of assets in the 401k, then you don't have to report a 5,500. But number one, there are lots of 401k plans. There are lots of 401k plans that right off the bat they are not solo. But regardless of solo or non-solo, just the fact that a ROBS owns privately held stock just the fact that it owns privately held stock, regardless of it's solo or not, they have to file a 5,500, and they have to have a third-party valuation of the stock. They have to get the stock of the privately held company, which is the C Corp, that the franchisee has that is operating their franchise through. They have to get it valued by a third party each year. So if you add up the costs that go into the normal cost that you pay to the Rob's promoter for the record keeping and compliance, plus the cost that you pay to the third party valuation company, the costs add up year after year after year. And also exit strategy out of a Rob's plan is not so simple. So so those are the big three negatives: year after year income taxation of a C corp compared to an S corp or LLC, high fees that go into a Rob's, and difficult exit strategy. So now every Rob's, so I'm not saying that Rob's never works. Rob's work, if there's one thing that I've learned as being the affiliate CPA of the Franchise Broker Association, and let me be perfectly clear, I give the pros and cons on Rob's to candidates, and I have candidates, and there are candidates that after their discussion with me, they say, Mike, thank you for bringing all the pros and cons about Rob's to my attention, because I think I'm going to not go the Rob's because of it. But I also have the client that says, Mike, thank you for having this discussion with me. I've absorbed everything that you said. I learned things that I didn't know going into the conversation, but I'm still going to move forward with the Rob's because of X, Y, and Z. So everyone, I'm not trying to steer people away. I'm just trying to present the pros and the cons of every situation, of S Corp, of Rob's. And so, but there are cons to Rob's that a lot of these candidates have no clue about until they talk to me. And so I just think, and so with that said, if I wasn't in the process, and I know I know candidates that, that are 2, 3, 4 years in a Rob's structure, and then I talk to them about stuff about exit strategy that they had no clue. And so that they have no clue, all that means is that the status quo of how the industry is and how they educate these buyers on Rob's plans is not good enough, in my opinion. And everyone has their own agenda, and I can see why Rob's promoters don't want to shower all the negatives of Rob's onto the buyers. I get it, but that is the need in the process that I fulfill, because I just want to provide as much advice as possible and let the end user make as best a decision as possible. So I'm not trying to step on anyone's toes or hurt anyone's feelings. So the way that the Rob's plan is the due diligence on the Rob's plan, a deep dive into the Rob's, both the pros and the cons, can be better in the industry overall. It's lacking in the industry overall, and that is a problem in the industry that I am striving to solve. And I just do one phone call at a time on these consultation calls. And so everyone, all of these franchise buying candidates, it's they can't all be painted with one broad brush stroke. Everyone's investment level is different. You have someone who's investing stuff, and then so there's also if you just doing an S corporation with a 401k and then doing a 401k loan where you can roll over $100,000 and borrow out $50,000, and just doing an S corp 401k loan, which allows you to, the point I'm getting to is that that's a way to there are investment level, there are people that the investment levels are different. So you have people that are investing in a franchise and they need 50 to 75k. Then you have people that are investing in 500,000 to $1 million plus. So everyone's investment level is different. Everyone's appetite for risk is different. Everyone's view on leveraging debt is different. Everyone's view on leveraging retirement assets is different. Everyone's composition of their personal financial statement is different. You may have someone who has a lot of liquidity. You may have someone who has a lot of equity in their house. You may have someone, but then you may have someone that if you look at their personal financial statement, they have $10,000 cash in the bank. They have 20% equity in their house, and the only room that they have to work with if they want to buy a franchise, is the $500,000 that they have sitting in IRA money. So the only option that person might have is the Rob's, depending on, because of the specific allocation of their assets in their personal financial statement. coupled with the investment level that they want to go into. So, but then you might have someone who, if you take a look at their personal financial statement, they have the flexibility to go other routes other than the Robs, because they have assets in other places other than the retirement. So so everyone's personal financial statement and allocation of their personal financial statement assets are different. Everyone's household situation is different. You have people that are married and they have a spouse that brings income into the household. You have people that are married that has a spouse that doesn't work. You have people that are not married. You have people that whether they're married or not, they are going into their franchise business as a supplementary income stream, and they're going to work their W-2 job still as their main job, and their franchise is going to be their side business. You have people that are ditching out their W-2 job and they're going to go all in and just do their franchise. So the point I'm getting at is everything is case by case, and I'm talking to someone on Saturday. I have like 2 or 3 people I'm talking to next week, probably more, because I'm still waiting for some people to confirm. And every conversation that I have with someone is different. And so I feel that there's too many, there's too much one size fits all in the industry right now when it comes to Rob's plans. It's like, oh, you want to buy a business? Do a Rob's plan. And I just think that there's just not enough due diligence on the pros and cons of the Robs. Just like there should be a deep dive into the pros and cons of every every aspect of accounting, tax, funding, entity structure. There needs to be a deep dive into the pro and con of every situation. And so when it comes to these subject matters, this is where I really provide a lot of value to the consultants, because I help explain these things and provide value to their franchise buying candidates.
Wow. That's really diving deep into that financial aspects.
Yeah, and Ray, we need to go to commercial break real quick, and then when we get back, you're the next question.
Sounds good.
All righty.
Ever wonder how successful business people get educated about franchise business options? The Franchise Consulting Company is a group of over 100 franchise professionals with more than 2,000 years of franchise experience. We help our clients select and investigate franchise companies. And like a realtor, our services are free of charge to you. Our fees are paid by the seller. Reach out to us to learn more and get a free copy of the Franchise MBA, the #1 bestseller and highest reviewed book on Amazon in the franchise category. Our website is thefranchiseconsultingcompany.com, or feel free to call us on 800-321-6072.
Sure. Well, I want to break away from the financial aspect, at least from funding the business, and talk a little bit about the franchise disclosure document, commonly known as the FDD. Now, I think that with your expertise, you're going to have the ability to drill down into all the financials regarding the FDD. But what advice are you giving people besides the financial aspect of it regarding the FDD? What portions should they be looking and diving into?
Well, so I mean, really, I stay in my lane. I really stay in my lane in my role, and so I think that's a question. I really think that that's a question that really is mainly for the franchise consultants more than me. When it comes to me, I'm most I'm most appropriate to loop in on any sort of item 19 and item 21 inquiries, because I'm the CPA, and then those are and so and of course if they want to review all the initial investment, then we can review that too. but I really just, I stick to the brokers know to loop me in for item 21 questions and item 19 questions, and I try to stay in my lane as the affiliate CPA, and not try to steer out of my lane and become the franchise consultant. I take my relationship with my franchise consulting colleagues very seriously, and I let them do their job, which is, should be going through the entire FDD with the clients, and then if their clients, candidates, I like the word candidates for the franchise buying candidate, and so, but whenever they want to do a deep dive into the item 21, the audited financial statements of the franchisor, and what are these financial statements telling them, and the item 19, which, as we know, is discretionary. The franchisors can make them in depth, or they can include nothing, or they can have anywhere in between. And just breaking down those numbers is where I provide value as my role as the affiliate CPA. But I try not to dive deep into the other parts of the FDD document, because that's where I feel like the franchise consultant, that's where I think that's more of a function of the franchise consultant. And if anything, they should loop in the attorney for a lot of those other items as well.
So what are you thinking is the outlook going forward, considering the pandemic? A lot of people are struggling, a lot of people are closing, some people are innovating and pivoting their businesses to accommodate the fact that we can't, be out in public. So tell me what you think about going forward, what the outlook is.
I think that people that are playing offense are going to win, and people that are playing defense are going to lose. That's all. I mean, it's really as simple as that. I think that when situations like when we're in, I was in college during the 2008 recession, and recessions are unfortunate events, but they're cyclical. I mean, it was a housing market crash in 2008, and now we have a virus pandemic related situation here in 2020. And I just think that there's going to be winners and losers in the whole situation, like there always is. And the winners are the people that triple down and just work, and just go on. Like I say, I'm a big Gary Vaynerchuk fan, so shout out to Gary Vaynerchuk. But one of the terms that he says always is, as a business owner, is you want to go on offense. You want to go on offense no matter what, and you always want to be playing offense than defense more. And so, one thing that Gary Vaynerchuk said that I relate a lot to is, if I can compare myself, if I can compare the way that I operate my businesses, to make a sports analogy here, if I would to make a basketball analogy, I would be the type of team playing basketball that would be winning the game 180 to 140. We're running a bunch of fast breaks, we're taking a bunch of 3-point shots, and sure, the other team is going to get a couple layups on us, but we're going on offense hardcore. And as opposed to a low scoring game, that's 80 to 70, which is a low scoring game in a 4-quarter NBA game. I think that the people in a COVID-19 environment, in any sort of recession environment, I think that it's just a matter of just tripling down and going on offense. And people that do that, and that's what spurs innovation. Going on offense spurs innovative thinking. Being faced with adversity, such as being in a recession, spurs innovative thinking. And the innovators and the people that triple down on going on offense and not slowing down and not using, and everyone's because people are in different. People are in different industries, and different industries are being affected by this current pandemic, and I get that. But if you're in the food industry, what innovative, are we going to go back to normal, or is there going to be a new normal in the food industry post pandemic? That's something in the food, are you going to have to triple down on your curbside pickup and delivery strategy and invest in technology that keeps the food fresh and warm, on the commute to the people's houses? Are you going to have to cut down? Are you going to have to cut your dining room in half, to get rid of that non-revenue producing square foot? Those are questions that or are you going to say, oh, this is just going to pass and it's going to go back to normal? Maybe it will. I don't know. But that's just so. And then you can take the same miscellaneous thought processes depending on what industry you're in. Like I was having a conversation with someone who was interested in investing in a children's education franchise about a month ago, and she was debating between two different brands, and she was really impressed with how one of the brands is really tripling down on their virtual classroom sessions, because a lot of people are like, they don't want, because of social distancing, they don't want to bring their kids to a classroom of like another 40 kids, like rightfully so. So like regardless of what industry you're in, are you coming up with innovative thinking as like going on offense, or are you playing defense? And I think that the people out there in the franchise industry and in the non-franchise industry, business owners in general, if like you're in a recession, you're in adversity, how are you going to respond to it? Are you going to triple down and go on offense? I think you have a better chance of winning. And if you're going to play defense and get back on your heels and start making excuses as to why you can't do this and why you can't do that, there's a good chance you're going to lose. And it's just, I'm not trying to like throw anyone under the bus or be harsh. It's just the way it is.
Absolutely. One of the things that we talk a lot about on the show is capitalization, and to get past these humps in the road, and they're always going to happen. The 2008, 2009 scenario, and now we have the pandemic. If you're undercapitalized and you're just running at the bare margins of the business, you're going to have a hard time during these bad times. So, what is your recommendation to your clients regarding how much should you put in reserve or have available to you to get past these humps in the road?
I just say that if like any sort of decline in revenue has to be met with a proportionate decline in expenses. You just have to figure out a way to cut your expenses. Because I'm telling everyone, everyone, the spiel that I just gave right here, which is pretty much you have to go on offense and you have to think innovatively and stuff like that. You have to do that, but at the same time, that's more like innovative thinking is not going to result in a new idea that's going to translate into revenue tomorrow, right? So but tomorrow, you may have half of the revenue coming in that you did yesterday, tomorrow. So in the short term, you do have to play a little defense in the sense of you have to cut costs where you can.
Right.
And I'm also telling people, it's been all this PPP and EIDL money out there. Try to apply for it. The worst that can happen is that you don't qualify, but at least you tried. Because a lot of these PPP loans can, 75% of them have the potential to be forgiven. They can be forgiven if 75% of them go towards payroll costs. So, you just have to be strategic as a business owner. You have to attack it from all angles. You have to go on offense, and you have to see what innovative thinking will this recession spur? What innovative thinking will this manifest into? And that's offense. But then in the very short term, oh my God, my revenue is now lacking because my customers and clients can't pay my invoices. So where am I? I'm going to have some sort of proportionate cut on my expenses. And it's unfortunate. Do I have to lay people off? That's a conversation that no one wants to have. Can I downsize my occupancy costs? Can I cut my supplies in half? Can I as the owner, can I take out less money from the business? Can I not, can I spend half as much money at the grocery store or out to eat as much as I did? So pretty much, that's the advice. I'm a business owner myself, and the advice that I tell people, both my clients, people in my network, friends, colleagues, affiliates, my family, the people that I talk to on these consultation calls, I just give the same advice to people that I live, because anything else would be contradictory. And so as a business owner myself, I am doing that. I'm trying to think of innovative ways that I can generate revenue in these times. I'm cutting expenses. So, and I'm staying on offense. and why, like, it seems like the rest of the world is slowing down. I'm trying to wake up, and I'm trying to go. I was already going 1,000,000 miles an hour, like in my normal non-COVID pandemic world, but now I'm going 2,000,000 miles an hour. So that's the same advice that I tell people.
Mhm. Elizabeth, do you have a last question? Or should I go ahead and ask the last question?
You go ahead and ask the last question.
Okay. Okay. Our favorite. No.
Ah.
We didn't see you, Fred. We didn't know what you were doing. Were you sleeping on the job? Were you sleeping on the job, Fred?
Is it for me? Is this for me to answer?
Yeah.
So the coronavirus. All right. So these like it's gonna make our immune system stronger because our immune system is getting introduced to it. So when these aliens come and invade and they have all these crazy diseases, we're gonna have that much more of a chance to survive because the coronavirus made our immune systems as a human race that much more stronger to give us that much more of a chance to survive this inevitable alien invasion.
That is a really good answer because if you remember War of the Worlds, that is how we won.
Yep.
Yeah. Now, well, we've got people, Michael, we've got people sitting on the edge of their seats because they want to call you, okay? Because they think, wow, this guy really knows a lot about what I want to do. So how is the best way for everyone to get a hold of you?
Sure. So, gosh, I mean, I think a screenshot of my contact information would be the best. I mean, feel free to share my email and my phone.
Well, that will be shared on the Pillars webpage. So yeah, just write verbally. Let us know how we can get hold of it.
The most efficient way would be to send me an email, and then from there, me and my team will get us scheduled to get on a phone call. And so, and then once I'm connected with everyone knows that they'll have my cell phone saved in their contacts, and they'll know that to connect with me on LinkedIn. So I'm only on LinkedIn, by the way. I have company profiles. Yeah. I have company profiles on all the other social networks that my team manages. My wife and business partner, Mimi, she's a big social media guru on all the social media platforms. My business partner, John Pace, over in BizFran Hub, he's on everything, but I'm only on LinkedIn. So send me an email that you're going to get you're going to get my email address provided by Fred and the team. Send me an email, and I will respond, and we'll get a phone call on the books. Connect with me on LinkedIn, Michael I. Reeder, and then once we're connected, you'll have my cell phone. I'm a text message away. I'm a LinkedIn message away. I'm an email away. I go for a 90-minute walk 7 days a week around the 9:30, 11 o'clock Central Time here in Chicago. So when I'm walking is the best time for me to take phone calls. So I schedule a lot of my phone calls when I'm out walking. And then I'll take another call or two during the evening hours around like 5:36ish. And so my calendar's full, and I want to keep it full. So keep the calls coming. Reach out to me, and let's get a phone call on the books. And I look forward to connecting with everyone that wants to connect. I'm here to provide value to them in any way that I can. So I look forward to it all. So send me an email and connect with me on LinkedIn, and I look forward to connecting with you all.
Fantastic. Thank you, Michael. You're a fantastic guest.
Thank you, Fred and Elizabeth, Ray, for the time. It's been great. Let's do it again sometime.
You bet.
Wonderful.